The creation of new data centers is electrifying the U.S. economy. During yesterday's cabinet meeting in the White House, President Trump said Meta will spend $50 billion on its new Hyperion data center in Louisiana, noting that the project is expected to be the size of the island of Manhattan. That's a small little operation there. Those data centers, though, desperately need electricity. And since the president signed his executive order on May 23rd to quadruple domestic nuclear power production over the next 25 years, nuclear stocks from Constellation Energy to Cameco Corporation, BWX Technologies have been surging. You can see, CEG up 8%. OK, that's good. Cameco up 42%. And you've got BWX, who just was on the show last week, up 54%. And those are just a couple of the holdings in what has been a huge winner in ETF land. Vaneck Uranium and Nuclear ETF has gained 44% year to date. Joining me now in a Fox Business exclusive is the man behind that ETF, Vaneck CEO Jan Vaneck. Congratulations on the 70th anniversary of the business.
Thank you.
Well, it sure is nice to have an ETF that's done that well so quickly. What do you believe is the real generator behind that?
Well, you know the expression, it takes 10 years to become an overnight success?
Oh, yes.
So NLR is 18 years old. At the end of 2020, my colleague was pointing it out, it was less than $20 million. And we've raised $1 billion this year. So obviously, there's been a huge policy shift globally, and there's now bipartisan support for nuclear. And we need it because, as you said, like we have been calling nuclear and the electrification, the kind of AI 2.0 trade, right? We kind of knew it was going to happen, and NLR has doubled the performance of SMH, which was our semiconductor ETF, which was the darling last year.
It's amazing.
And we have NVIDIA earnings, of course, today.
Well, staying with the NLR, the nuclear ETF. So when you look at a basket of stocks, which is what an ETF is, and it gives people just a panoply of choices, and it's all in one particular ETF. So it's great. You have exposure to the big, the little. That is also part of the problem. Make the case for not simply just buying one of the top ones. When you look at CEG, that is basically the biggest part of it, right? It's your biggest holding, I think, in there. But then you look at Encore Energy Corporation. It's just 1% of the assets. Either one of these, a single bad print during an earnings report, can swamp the whole thing. So why not just stick with one or two of the big names in a portfolio? Well,
so we think it's actually prudent in this space to be diversified because the kind of other ETFs out there were just uranium mining ETFs. And so mining is okay and uranium's okay, but you can actually have a lot of growth in the industry and uranium stays flat, right, depending on supply demand. So we thought, get the users, get the utilities that are leveraged into nuclear power, right? Get some of the miners, but what's really been the star over the last 12 months has been the new tech companies, the SMRs, and they've rocketed. Or they were up 5 to 10 times last year. And so the risk was coming into this year, can this trend continue? And Trump has just pushed so hard on the adoption of this technology. They're bringing online, like 3 Mile Island, one of their reactors, a year ahead of time. Like, you haven't had those words in that order in the nuclear industry for 30 years.
Yeah, small modular nuclear reactors are a thing now, definitely. So it feels like the planets have aligned, and they'll at least be in place for as long as this administration is in place, although the Biden administration was also pro-nuclear. Let's talk about the big run-up in crypto recently. Obviously, Bitcoin hit a brand new record a couple of weeks ago, more than 125,000. But Ether has suddenly reared its head and hit new records. Tell me about your Ether ETF. What's in it, and why is it doing so well?
Right. So it's very much what I call the Wall Street token. And what I mean by that is, if you think that because of stable coins now, every bank, and they are, and every financial services company has to have a way of taking in stable coins. If I want to send you stable coins, your bank has to figure it out, or you will find some other institution to do that. So the winner is who's going to be building on these blockchains. It's going to be some Ethereum or something that uses Ethereum's kind of methodology, which is called EVM. And so that's why ETH is because the Wall Street CTO is going to turn around saying, what the hell is this stuff? When am I going to build on? And it's going to be Ethereum.
I was looking quarter to date at this ETF, ETHV, V as in Victor, up 81%. But is that simply because of, again, a very sort of magnanimous feel coming out of Washington, D.C., or something more than that?
It's companies have to employ technology to enable stablecoin usage over the next 12 months.
I see.
I mean, it'll take a while, but no financial services company wants to say, no, that's okay, don't send me that digital dollar. They're getting digital dollars in another format. They're going to want these digital dollars. So they have to adopt the technology. And Ethereum was really hated, actually, at its lows earlier this year for a variety of reasons. We also have an actively managed ETF, Liz, and that's why for people that don't follow this technology closely enough, I'm like, yeah, don't start picking tokens if you don't know what they are. Look at something that's actively managed.
Yeah, and you were among the first, if not the first, to file for that spot Bitcoin ETF.
First ETF sponsor, yeah.
Amazing, amazing. And that would be HODL, H-O-D-L. Okay, NVIDIA reports after the bell. You mentioned SMH. Is that the best ETF to capture all that is NVIDIA and its ecosystem that seems to be, I call it the splash zone, everything out there seems to be in the ecosystem now?
Look, I think the market is really richly priced right now. We had a great quarter of earnings, and part of it is because of AI. I mean, big companies are cutting their costs, right? Microsoft has cut employees this year. Amazon's not increasing its headcount, but their revenue and their profits are exploding. So it's a fantastic environment. Just one factoid really quickly, Google has said that they have gone from 480 trillion tokens a month to 900, so they've since May. So that the demand and usage of these semiconductors has gone up a lot. So I don't think we'll get any downside surprises. It's just going to be the forward guidance, that may not be so exciting.
Really quickly, the biggest underperformer, the worst performer of your ETF world, because that sometimes gives us an idea of, waxing and waning of different sectors.
Right. Well, energy is lost and forgotten. And then I would say...
Except for nuclear.
Yeah, oh yeah, sorry. Yes, except for that. And nat gas and related things, but still. And then I would mention India, because India has a great 10-year growth profile, but the kind of gas came out of the markets after Modi's election last year.
And tariffs.
And now the 50% tariffs, so I think it's a buying opportunity.
Oh, even because it's so low.
Yeah, I mean, what worse can happen to it?
Try not to buy at the highs, everybody. That you want to be careful of. Great to see you, Jan, and congratulations to the whole Vaneck team on the big anniversary.
Thank you. Thanks for having me on.